Welcome to the Bitcoin Bulletin, where we break down the biggest stories shaping your crypto world. Get ready for a rapid-fire rundown that'll get you up to speed fast. First up, we're diving into how you can earn Bitcoin while you sleep with the passive power of cloud mining. Then, get the inside scoop on what a massive $1.25 billion Bitcoin futures flush means for the markets. We're also tracking Ian Calderon's bold vision to shape California with Bitcoin. And you won't believe the jaw-dropping $632 million Bitcoin purchase by Japan's Metaplanet. Stick around, you don't want to miss this. Hit that subscribe button and ring the bell so you never miss an update. Earn Bitcoin while you sleep, the passive power of cloud mining. In a volatile market, the quest for stable income streams is hotter than ever. As September 2025 saw a significant market correction, with Bitcoin and XRP taking sharp dives according to Reuters and Bloomberg, investors are actively seeking ways to generate passive income that aren't directly tied to daily price swings. This is where cloud mining steps into the spotlight, offering a compelling alternative to traditional hardware-intensive mining. Unlike traditional mining setups that demand hefty upfront investments in hardware and continuous maintenance, cloud mining platforms like Miner simplify the process. Users can rent a portion of computing power from a data center, effectively mining Bitcoin without the hassle of owning or managing physical equipment. Miner, a mobile app, allows users to earn daily profits on contracts denominated in USD, providing a stable income stream even when Bitcoin or XRP prices fluctuate wildly. This USD-denominated approach offers a unique advantage, allowing users to weather market volatility while still accumulating returns. For investors bruised by market swings, the allure of passive income is undeniable. Instead of simply holding assets, the ability to create a predictable cash flow offers comfort and security. The process is typically straightforward. Set up an account, choose a plan that fits your budget, and activate your membership. Daily returns are credited, with options to withdraw or reinvest. However, as with any investment, due diligence is paramount. Understanding the contract details, fee structures, and the provider's track record is crucial before committing any funds. Don't go anywhere, because the market's biggest players are making moves that could shake things up. We're next talking about a massive Bitcoin futures flush that's got analysts talking. What the $1.25 billion Bitcoin futures flush means for markets. In a significant market reset, over $1.25 billion in Bitcoin futures open interest has been wiped out in just the past day, a move analysts are calling a healthy purge for the BTC derivatives market. This drawdown has seen open interest shrink from $85 billion to $80.8 billion, signaling a stabilization of speculative positions. Jean-David Paquignot, Chief Commercial Officer at Deribit, noted that this flush has reduced leverage and could be a positive sign, provided key support levels for Bitcoin are maintained. Analysts at Bitfinex echoed this sentiment, describing the current conditions as a temporary cooldown after volatile peaks led to large liquidations. They believe there's no immediate cause for alarm, especially since funding rates remain normal and liquidations are normalizing. However, Paquignot cautioned that failure to hold support levels could indeed shift sentiment towards bearish, making macroeconomic clarity and price stabilization crucial factors moving forward. Federal Reserve Chair Jerome Powell's recent speech offered little concrete guidance on future policy, adding to the economic uncertainty as investors await key consumer spending data. Bitcoin's price has seen a slight dip, trading just below $112,000, reflecting a broader market caution. Bitfinex analysts suggest that significant spot selling or large exchange withdrawals would be the true indicators of structural change. Paquignot highlighted that lower trading volumes warrant caution, but positive news from upcoming economic prints, like the PCE data, could catalyze a Bitcoin recovery, potentially pushing it towards $120,000 if dovish signals emerge. With October's historically bullish seasonality approaching, this pullback might just be setting the stage for a strong V-shaped recovery, but vigilance remains key to navigating potential volatility traps. And speaking of shaping the future, one politician is making waves by bringing Bitcoin into the political arena. California's next move is up next. Calderon sets sights on Bitcoin. How will it shape California? As California gears up for the 2026 gubernatorial election, candidate Ian Calderon is making a bold statement by positioning Bitcoin at the forefront of his campaign, proposing a radical shift in state financial operations. His vision includes integrating Bitcoin into the state's financial framework, raising critical questions about regulatory hurdles, public perception, and the feasibility of establishing a Bitcoin reserve. The path to integrating Bitcoin into state finances is fraught with challenges. Regulatory compliance is a major hurdle, with states like Washington imposing strict licensing and reporting requirements, while others like Illinois offer more ambiguous frameworks. Adhering to evolving Know Your Customer, KYC, and anti-money laundering, AML, laws adds complexity, requiring states to be agile. Furthermore, integrating with traditional financial systems poses difficulties, as many banks remain hesitant to deal with cryptocurrency businesses, creating liquidity and volatility risks for state treasuries. Consumer and investor protection remains a paramount concern for regulators, who must safeguard against fraud, market volatility, and cybersecurity threats. Calderon's pro-Bitcoin stance taps into a growing trend among voters. Surveys indicate a significant portion of the electorate, ranging from 33% to 49%, consider a candidate's position on cryptocurrency when casting their ballot. With 19% to 21% of voters already invested in crypto, this demographic represents a potent voting bloc, particularly in swing states. Voters also express frustration with the U.S. lagging behind other nations in cryptocurrency regulation, making Calderon's clear pro-crypto stance an attractive proposition. The potential advantages of a Bitcoin reserve include inflation protection due to its fixed supply and positioning California as a leader in digital asset adoption. However, risks like extreme volatility and regulatory uncertainty cannot be ignored. From political ambition to corporate power plays, we're heading east for our next story about a massive Bitcoin acquisition that's rewriting the record books. Japan's Metaplanet announces $632 million Bitcoin, BTC, purchase. In a landmark move, Tokyo-based Metaplanet Inc. has executed the most substantial single Bitcoin purchase by an Asian public company to date, acquiring 5,419 BTC for approximately $632.53 million. This acquisition significantly boosts its total reserves to 25,555 coins, valued at around $2.91 billion, positioning Metaplanet as the fifth largest public holder of Bitcoin globally. This strategic acquisition, funded largely by a planned $1.45 billion international share offering, underscores Metaplanet's unwavering commitment to Bitcoin as a core asset. With an average purchase price of $116,724 for this latest batch, bringing their overall treasury average to $106,065. The company is aggressively pursuing its year-end 2025 target of 30,000 BTC and has set an even more ambitious goal of 100,000 coins by the close of 2026. Metaplanet's journey with Bitcoin began in April 2024 as a hedge against Japan's yen depreciation and inflation, evolving into a calculated accumulation strategy evidenced by key milestones like reaching 10,000 BTC in June 2025 and 20,000 BTC in early September. The company's BTC yield metric consistently shows strong performance, with figures like 129.4% for Q2 2025, demonstrating tangible returns and shareholder value enhancement. Under CEO Simon Jurovich, Metaplanet is positioning itself as Asia's Bitcoin proxy, akin to a regional spot ETF. The firm has also established two new subsidiaries, Bitcoin Japan Inc. and Metaplanet Income Corp., to manage derivatives trading and income-generating activities separately, potentially unlocking new revenue streams while mitigating risks. Despite Metaplanet's shares experiencing a significant dip, partly due to market jitters and the inherent leverage of tying stock performance to Bitcoin's price. The company's unrealized gains and strategic vision signal a long-term commitment to Bitcoin as a bulwark against economic volatility. And that's a wrap on today's top stories. Don't go anywhere, we've got a lightning round recap and your full call to action coming up right after this. And that's all for today's Bitcoin Bulletin. We covered how you can earn passive income with cloud mining, dissected the major Bitcoin futures flush, explored Ian Calderon's Bitcoin-centric vision for California, and marveled at Metaplanet's massive $632 million Bitcoin purchase. If you found this update valuable, make sure to smash that like button, subscribe to the channel for more breaking crypto news, and ring that notification bell so you never miss a beat. Follow us on all social media platforms for real-time updates and join the conversation in the comments below. Until next time, stay informed and stay invested.